John Adams here with my very special guest and our weekly friend, Peter BERK from Reliant Mortgage Solutions. Hello, Peter. How are you?
Hello, John. Thanks for this opportunity.
Well, I am excited about our topic today because what you came up with for this week is something that I think most people they're simply not aware is a possibility. And we've got a lot of people listening to this show right now who over their working life have set money aside. They've maybe got some money in retirement or savings, but they're not exactly sure how that might work to their benefit if they wanted to buy a house. You've got an idea. What's it called?
It's delayed financing, and it eliminates the frustration factor of a home buyer getting beat out by cash offers.
All right. Well, this is happening more and more, and we're seeing these cash offers. They come in from investors. A lot of times they are over the actual value of the property there, which is sort of sad. But let's see how this works. It's called delayed financing. So essentially, what you're telling me is that let's say I am the buyer
Mhm.
and I'm competing against investors, and I know that, and they're making these all cash offers. I've got the money, but I don't want to put all of my cash indefinitely into this house. So, how does this work? Do I make an all cash offer to the seller?
Yes, but let's back up when you said, I've got the money. And let's presume you're buying your first home and you've got 10% or 20% or 15% down payment, but you're being beat out by these cash offers. And if you're able to come up with the difference between what you've got and the purchase price, and that can come from any source. It can be, and I want to say it can be someone loaning you money. It can be an in-law. It can be a sibling. It can be a friend, an ex-spouse, an employer. It can
How
be a
many
man or a
ex
woman on.
wait a minute. How many ex spouses are willing to lend you the money for you to buy you a house after they dumped you?
Well, if they want you out of the house you're in, maybe they'll loan it to you.
It's
But
possible. All right, I'm beginning to get the idea here. So, wherever the money comes from, I make as the purchaser an all cash offer to the seller, which obviously is more attractive to that seller. But after closing, I finance the home, or that's almost a refinance, except there's no re involved, right?
that's correct. And we've seen this transaction start the afternoon of the day you buy your house. Um, if you're prepared and ready to go, you can do that. As soon as you're on title, you can initiate that refinance.
So if it happened, I mean, potentially, could we start? Let's say we wanted to structure a transaction like this. Could I come to you even before I found the house and say, how would this work? And would this be an option for me?
Absolutely. That's what we encourage everyone to get your ducks in a row before you go down this path.
Okay, well, let's look at it a little more closely. I see you've got 80% here. Why not? Although I probably would only get an 80% loan anyway if I were financing, but why not 90 or 95?
Uh, it has to do with mortgage insurance requirements. So you're limited to 80% of the purchase price and your purchase transaction costs.
Okay, all right. And those proceeds from that quote, not refinance, finance, are used to either pay back this or reimburse myself or pay back if I borrowed it from Aunt Sally. I pay her back. If that could happen as quickly as a week or even sooner, it certainly would make her feel good, wouldn't it?
Uh, uh, Absolutely. You are borrowing money from someone with the intent to pay it back. 30 to 45 days after you get it.
Okay. All right. Now, let's assume 30 days from closing date of the purchase to the closing date of the refinance or delayed financing closing. Why would it typically take 30 days? Because that's about, I mean, I've sent you a number of borrowers recently, and they've closed within 30 days, most of them.
We use 30 days as a rule of thumb. The reality is, in this environment, you can probably get it done in shorter than 30 days. But just setting expectations up front, be prepared to repay that source within 30 days.
Okay. And if we had started earlier, I'm assuming there would be a commensurate shortening of the period between the cash purchase and the refinance date.
True.
Okay. All right. So the home buyer, that's me, needs to have access to the cash prior to closing. I've called Aunt Sally. She said, John, I will lend you $250,000, but I need it back in 30 days. What does it mean for me to have access to it? Does it have to be in my account?
No, Aunt Sally can wire it to the closing attorney on the day of the closing.
Oh, that's perfect, because that's what Aunt Sally used to work in a closing attorney's office, and she's much happier wiring it to Dewey, Cheatham, and Howe than giving it to me, because she thinks I'm going to go out and buy a Lamborghini or something. So
in most instances, the person loaning the money for that purchase are wiring it directly to closing on the day of.
So, and interestingly, can I offer to pay Aunt Sally a reasonable rate of interest on the borrowed funds?
You are welcome to negotiate any terms between you and Aunt Sally.
Okay, that's fair. The cash can come from anyone or anywhere. Now, this is very interesting because you've said relative, and that's where Aunt Sally comes in. But you mentioned here a retirement account. And it truly looks like this could come from anywhere. If I have a traditional IRA at Charles Schwab, and the money is sitting there in some sort of account, in a money market account, it's hardly earning anything. Could Aunt Sally have, or could somebody listening right now, if they had this money in an account, could they lend it to their child or to a close friend or a family member? How would that work?
You can borrow it from your own account, or the person loaning you the money can source it from their account. I know there are some 60-day requirements that I'm sure you can speak to on that. But wherever that funds can come from, but yes, it can come from an IRA or a 401k, wherever you're able to, yours or someone else's.
Okay. And let's say Aunt Sally doesn't have any money, but she does have on her house, which is worth $850. She has a home equity line of credit.
She could take an advance, wire the funds to the closing attorney.
So the fact that she's borrowing it is not a problem. This is starting to look better and better. Okay. And the closing attorney handling the purchase needs to prepare a loan note. Now, how is a note different from a security deed? Because I know normally at closing we see both of those.
Well, security deed is something recorded. It's in this case, there is no need to record a security deed. It's uncommon to record a note, but you don't have to unless the person loaning you the money wants a secured interest. But all we're asking is, if the money is coming from a third party that you plan on repaying, just have a simple note prepared at the time of purchase documenting that note, that loan.
So I normally think of the note as just like an IOU, which we don't record, and then the security deed, which is normally required in a traditional lending situation, is what we think of in Georgia as the mortgage, right?
Right. And
So this is where the new owner, which would be me, is posting the property as collateral. But you're saying we don't do that when I'm borrowing this from Aunt Sally.
it's not a requirement.
Okay.
It's just evidence that there was a loan proceeds, highlighting the terms, who the maker is. Obviously, it's the person who bought the house and is applying for the refinance, and the person who loaned the money, Aunt Sally's the payee.
Peter, and the note that must be recorded. This seems uncharacteristically reasonable for Fannie Mae and Freddie Mac. Whose idea was this?
Well, delayed financing has been around, and it's just gotten a lot more interest. You know, the documentation requirements are not very strenuous.
So the idea is that, look, if you've already bought the house, there's already been a meeting of the minds in terms of price, and I'm going to borrow the money to close it from Aunt Sally because she's got it. But the reality is, within 30 days, I promised I would give Aunt Sally her money back. So you and I could start this process well before I even found the house that I want to buy, so that I would have some assurance that when the time came, there would be a pretty good chance everything would work out, right?
Absolutely. You want to give all parties confidence that the refinance transaction can be approved and funded quickly and efficiently. So that's what our job is to make sure that there are no missing pieces to that puzzle.
So, and the proceeds, just as Aunt Sally had her broker wire the money straight to the closing attorney, now, as soon as we close the refinance, the money goes straight back to Aunt Sally or wherever she directs. Is that correct?
That's a requirement of these loans. If you borrowed the funds from the refinance have to be remitted back to that party.
Okay. All right. That makes sense. So, in a nutshell, why is this a good alternative? I understand that the ability that this would grant me to be able to, with Aunt Sally's prior approval and with getting together with you ahead of time and knowing this isn't going to be a problem, if that allows me to just go under contract and say, I will close within 7 days. We'd like a cursory inspection and 3 days due diligence or something. That's pretty impressive if I'm competing against these investors on their own terms, essentially, right?
It puts you ahead of the pack.
Absolutely. And this is a real, did you see that CoreLogic did a study that showed that during 2021, investors, I'm talking about single family homes only, investors acquired 26% of all single family homes in 2021. But in Atlanta, it's 43%.
Wow.
That is a significant percent of our market. So anybody who's saying, well, I don't have to worry about making a cash offer because I don't do that type of thing, 43% of the inventory is going to investors.
Yeah.
And I assure you, investors aren't making offers that require a contingency for financing.
Absolutely. Well, this will put you ahead of everyone or on equal footing with those investors.
Good. I like it. And it beats other offers. Would you speculate that there are situations where a seller might actually take an offer that netted them less in order to have the assurance that they were going to get closed with a cash offer and not have to worry about a financing contingency.
I'm sure it happens with much regularity.
I've seen it happen, and it gets you the home that you need. And within X number of days, depending upon when you get started, and I'm going to recommend anybody that has an interest, contact you today, Peter, and say, let's start this conversation. Let's understand a little more about how it might work. I don't have an Aunt Sally, but I do have maybe an Uncle Bob or who knows. But
Maybe
somebody
you have
that
a
would,
generous friend or a generous employer who says, look, I can't give you the money, but I'll loan it to you if you can pay me back. Or maybe it's a combination of an in-law. Your parents are saying, well, we're going to give you the 20% because you don't have it. Well, how about they give you the other 80 and the 20? You pay them back the 80, and that 20% remains as the gift.
I like it. I really do like it. It's a very a little bit unusual form of financing, but I see the benefit. And in this very competitive market where we're dealing with people like, and I'm not singling anyone out, but Invitation Homes, I believe now has about 12,000 rental houses in the Atlanta area, and they're hoping to purchase more. If we're competing with people that just write a check, this gives us an advantage certainly over the people who are making their offers contingent on this, that, the other, and financing, right?
It will give you the advantage you need. Yes.
Very interesting. Peter, I always say after we talk, now you have a friend in the mortgage business, and I say start the conversation. The sooner somebody picks up the phone and calls you, or they just text you and say, hey, give me a ring, the sooner they can determine whether or not this might work for them or someone they know. Is there any prohibition on in my theoretical situation where I'm borrowing from Aunt Sally? Is there any prohibition against my agreeing to pay Aunt Sally, say, 10%
John,
within 7 days of closing, and when I pay her back?
there is no prohibition against paying interest on, if it is and in most instances it is a loan, because that's why you're doing delayed financing. It's irrelevant to the transaction.
Very, very interesting. 678-557-9759. Peter, you keep coming up with these great ideas. And I think this is particularly relevant to the people who watch and listen to Real Estate Coffee Break, because a lot of our audience has retirement accounts, a lot of them have savings, a lot of them have children who are in an age group that needs to be buying a home right now, and they're experiencing this very, very stiff competition. A very interesting strategy. And once again, our thanks to you and the folks at Reliant Mortgage Solutions. Peter, thank you, sir.
Thanks, John. Thanks, everybody.
See you again real soon.
Thank you.